Everyone, today I have the pleasure to sit down and chat with Mark, who goes by the name or the nickname Ghostrider. Mark is a trader based in Scotland, a client at Global Prime, and he definitely made a name for himself through our Discord room by being actively engaged and sharing his unique way to trade the markets based on supply and demand, divergences, and fractals. Ghostrider gained such an impressive following at Global Prime that eventually it was decided to create his own mentorship room to provide a platform where others can be learning how he trades and profits in the marketplace. Mark, Ghostrider, welcome to the interview. How are you?
Very good. How are you
Excellent.
on?
Excellent. So let's get into the nitty and gritty. Let's get started. And before anything else, I also, had the question mark as to what led you to be called Ghost Rider. Is there any story behind it?
I just love the film. He does the man does good. He doesn't like people that does bad. So that's a bit like myself.
Excellent. So you would say that your profile as a trader or your profile as a person somehow represents the character and the movie itself.
Very much.
Awesome. So, Mark, would you like me
If
to
it
call
if
you?
it's possible if it's
Yeah,
possible if it's
yeah.
possible, Ivan.
Would you like me to call you Mark or Ghost Rider?
Yeah, whichever you prefer.
Perfect. Okay, so Mark, every trader has a story behind how he became interested in the financial markets. Can you just tell us a little bit what's your story, how long you've been trading, what drives you to trade the markets?
I've been trading too long to remember really. Since I had a job. I had a job initially with Credit Suisse. I left them. I went and did something else, and then I went back to them, and I came to the realization after I worked for them for quite a few years, I thought to myself, I can do this. I can do this for myself. But it wasn't quite so easy doing it for myself. Made mistakes, lost a lot of money, and after doing that initially, I sat down and said to myself, right, where am I going wrong here?
Hmm.
And where I was going wrong was putting so much pressure on myself because it was my own money that it was an urgency to earn money like I think most traders do when they start out on their own. But with the knowledge that I had from working for a firm, I found out what the mistakes were. I noted them down. I wrote everything down, pen and paper, like I had been, and I still do. Um, and that's really where it all started from. And another little point I want to say is,
Go ahead.
if you're too busy earning a living to have a life, then trading is the way to the freedom to that life. If you want to work hard at it. And another thing is, it takes 7 years to become a doctor. One of my daughters is training to be a doctor at the moment in Queen's University in Belfast.
Hmm.
Takes 7 years to do that degree. If you think you can become a trader in a fortnight, then don't bother because you honestly can't. Um, I would say it takes at least 2 to 3 years to be comfortable riding the bike, as I say, and being able to jump on and off of buses
Yeah.
confidently.
Mhm.
When you can trade a screen as you automatically ride a bike, then you can say you're getting there. Until then, I personally would recommend being on a demo, although I didn't do it that way, but I paid a high price for it initially. I would suggest being on a demo for at least 6 months, because if you want to take the route I took and lose a fortune and nearly lose everything that you had, your house, everything else, the cars, the wife, everything else, try it that way. But do it on demo. And the thing about a demo account, so I want to say this to everybody, treat it as if it's live. as if it's your own pound notes. And you very, very soon see where you're wrong and where you're right. If you treat it like if you set up a demo account with £100,000 in it and have 20 lots per go, then it's not really all that live, is it really? If you have it as £5,000 and go 0.01 lots to start with and trade like that and be careful with your stop losses and your break evens and your take profits, then you'll very quickly learn. But it's the only way to use a demo account.
Yeah, I often say that if you actually want to make it in this very challenging industry of trading, you cannot go have in if you want to be all out. In other words, if you actually want to gain independence and live in your own terms, you cannot just be giving a half-hearted effort. You have to definitely go all in. Now, when it comes to demo live, that is debatable, but definitely I get the idea of what you're saying. Now, when it comes to you finding Global Prime, and I just want you to have a very brief opinion about it. Like, what do you think makes Global Prime such a good broker that has become your choice to interact with us? Is it the liquidity, the spreads, latency, execution, pricing model, commissions? What moves the needle for you when choosing the best broker to trade with?
I don't know what first of all attracted me to Global Prime, but I know why I stay here. I've had a good few brokers. I have a good few brokers now that I use. I don't only use Global Prime, but Global Prime is the only broker I've ever found where you can actually talk or telephone the people that own it, their head currency strategist, you, Ivan, being the overall strategy man. You're fantastic at what you do. If I tried to phone somebody from IG Index to speak to the man or the company that owns it, I'll tell you something, you would have some bother even getting through to someone that deals on the dealing desk, let alone anything else. And that's, to me, if I have a problem with Global Prime, I can just click Jeremy's thing in Discord and I can talk to him.
Yep.
Or I can tick Qilong's, if I have something wrong with my account, I'll just click Qilong and it's done. Fixed. And that is so different to any other broker I've ever been with. And it's like chalk and cheese.
It's refreshing, isn't it?
Oh, it gives you, it's not so much refreshing, I don't think. It gives you the confidence to know that if you're not happy with something, you just have to ask.
Yeah. So really thankful for the kind words. Let's keep moving on because I know that people are really interested about the ins and outs and getting into the nuts and bolts of how you approach the market. So first of all, we can obviously divide traders such, we can go from scalpers, swing traders. How would you define yourself as a trader? What category you fit into?
That's a great question.
Put it in your own words, I mean, I know you have your own vocabulary when it comes to trading, so put it on your own words. How would you define yourself?
I'm not going to put it into my own words, Ivan, because everyone will click off with all the swearing that will go on. Oh, Jesus. How do I define myself? I can be... I trade in a day, it's really strange. As I said about the analogy about riding a bike, okay? Mm-hmm. If I get up and I'm feeling really good, I'm in the shower, I've done me Wim Hof stuff, I'm really ready to go. I've had my cups of tea, I've walked the dogs, everything else. I'll trade maybe the 5 minute for 2 or 3 hours because it's exciting. There's action all the time. But if I'm in my usual mode, mm-hmm. I'll trade the 4 hour, I'll trade the daily, I'll even trade in the weekly. So sometimes I have trades in the weekly. I still have 2 trades running in the weekly now that I only have to check once a week. I only have to check dailies once a day and so on and so forth. But if I want something exciting to do, it's a bit like my passion for poker as well. I'll trade in the shorter time frames because there's more action, there's more things to do. if you understand what I mean.
Yep.
It doesn't matter what time frame the system's in. It still works exactly the same. You just got to be a lot faster to process what the signals are telling you. That's all.
Fantastic. Okay. So if you can start walking us through a little bit, what is your trading methodology like? And here, I want you to feel comfortable in how much you're going to give out. So if you could just walk the audience for someone who's never seen what kind of approach you have when it comes to trading the markets, how would you actually go about looking at any chart and then defining what's your bias, what's going to be the potential trade that you're going to putting in? And I know that supply and demand, fractals, and divergence is at the core, is at the cornerstone of your strategy. But could you just kind of like walking us through a little bit some basics?
Yes, right. I'll go to the end of this chart here. No, that's a long one. This here is a chart of the Nasdaq. It's the Nasdaq 100. It's a daily chart.
Mm-hmm.
On here, I have these here are called. I'll show you. These here are called fractal divergence patterns.
Mm-hmm.
It's a divergence between two fractals. There was a fractal formed there, and there was a fractal formed there. Because it's within a certain amount of pips, it tells me that it's a support level. This one here, there was a fractal formed there, and there was a fractal formed back here. Because it was within a certain amount of pips on the daily chart, it told me it was a resistance level. I don't use them all the time, but I'll show you the other part. I'll take these off because I didn't expect to use this chart, but it's the best one that I know. Take them off. Right, this is how it works here. If you go to here now, right, if I put my crosshair over that,
Mm-hmm.
there's a ZZ. The ZZ tells you what the lowest or highest candle of a move is. If this next bar comes lower than this ZZ will hop across onto this bar to then tell you that this one ends the lowest. If this ZZ stays where it is today, and this candle here closes long,
Mm-hmm.
which will be the two lighter colours. If this closes long, this here has come down, this here goes up. So the Nasdaq will go long. On a break of this demarker, it'll go to there, 798 pips. From here, if it closes long at the top of this bar
Mm-hmm.
and breaks the demarker, it'll go to there, 1322 pips. So if this was to close long, I would have a small position here at the open of the next candle. On this one, on the break of this fractal being exactly at the demarker level,
Mm-hmm.
this is where all the volume will go in there.
Would you be re-entering the position on a break of a demark?
Yeah, add to it. Don't re-enter it. Add to it.
Okay. Now, for you to go long at the bottom, around the levels that we're trading at right now, you would need to first spot a divergence with the OSMA indicator, correct?
Oh, 100%, 100%.
Can you touch on that? So what are you looking at?
Plus, I would want to see. I would want to see one of these. See this green bar here?
Mm-hmm.
That's a volume bar. That means that there's been
above average volume.
Yeah, average. Yeah, over the last 10 candles.
Yeah.
So this here this here was a sell candle.
Mm-hmm.
This here is more buyers and sellers. This here is all buyers. This here is all sellers. I haven't got one of the other ones. Let me see if I can find one. There's a purple one there. That means more sellers than buyers.
Mm-hmm.
The red is all sellers. That's more sellers than buyers. The blue is more buyers than sellers, and green is all buyers.
So essentially communicates that there's real conviction.
Oh, absolutely, 100%.
Mm-hmm.
I had to ask permission to use this indicator from a long-time friend of mine.
Yeah. Now, what happened to the long position if we do not get the volume? So we have the divergence in the OSMA, we close the current candle long, and would you be lowering your risk yet still taking the position long?
Yeah. See, the beauty of doing this is I have all day. See, once that candle's closed in my direction,
Mm-hmm.
I have all day. right? You have a day, because you're using a daily chart, you have a day to decide what you're going to do, right? If this was a 5-minute chart, right, there's the Osma, there's the lowest candle, there's no divergence there to go short, but there's no divergence there to go long at all. On the break of that there, on the break of this, on this candle that broke this, the marker, you could have gone long, 100%. What is that? That's 23 pips there.
What triggers that
In
long?
5, 10,
What is
what's that?
What's the set of criteria that would be triggering that long of the mark
the
line?
ZZ print, the
Okay.
ZZ printed, the ZZ printed there. This here yellow, this here white arrow tells me that the Osma's flipped from negative to positive. This here tells me that a fractal's formed. So you could have entered on the cross of this, on the close of this candle above, which is just fractionally above. If you see where that is there,
Yep.
that's just fractionally above the mark. You could have entered on that close. This here would have given you another entry here, although it wouldn't have formed until this candle. That there would have been 23 pips into the bag in 5, 10, 15, 20 minutes. It's come back down now, and it's retesting the demarc. If it closes here now, the ZZ is formed. It's testing the demarc. It's testing the demarc level. A close below that demarc would mean that it's going to come back down to here. 20, 24 pips down.
Even
But
if we don't have a divergence, would you wait for a divergence to occur after that?
There's no divergence on that one again. You see these, I'd be ignoring these. The ones without the divergence, I would ignore them.
Okay.
Let me see this one here. This one here is a perfect one here, Ivan, right? The ZZ prints there. The higher the price comes lower, the Osma prints higher. So a close in the right direction from that ZZ telling you the direction is there.
Yeah.
That's your entry there. If you'd held it short, this here was a reaffirmance. You don't take that because it's against the Osma. This here's a reaffirmance. Here's another Osma that crosses below the zero, and that there is 108 pips.
So there seems to be a lot of emphasis on the ZZ indicator. Could you just walk us a little bit under the hood how this indicator works? I think it's based on the zigzag indicator. Am I correct thinking that?
Yeah. Yep, 100%.
Okay. So
100%.
how does it paint those dots? What is it based off? On market cycles based on the zigzag indicator?
Yeah, just on exactly that, Ivan. All it is an object that you can see that saves having to have the lines up and down. If you know how zigzag works, it just saves you having to have the lines on. Plus, it saves you having to hover over. Like sometimes years ago, I used to hover over each handle to see if it was higher or lower, and the Osma was higher or lower. Before you had all this technology stuff, we do colours and dots and fractal levels like that there. These fractal levels are based on 3-bar fractals that have formed. So there must have been a 3-bar fractal along this level somewhere in history for this to have printed, because this is called a fractal reversal level. And somewhere in history, at this level exactly, there's been one printed already. At this level, somewhere exactly in history, there's been a 3-bar fractal, 5-bar fractal printed already in history as a short, as a long, as a long, as a long, as a long, as a short. This one here is an absolute humdinger of a signal, because the ZZ comes, the switch from positive to negative comes, plus the fractal forms. That entry there would, to me, have been a humdinger. But another thing about it is that when all three form in the same candle, it tells me that the market's running out of power, because below here, it forms this one, which then goes there. 3,097 pips.
Yeah, fantastic. Have you come to realize that any Any particular combination of timeframes that you find to be the most useful? You've already touched that the ones that are the most non-stressful are definitely the 4-hour, the daily, the weekly. But is there any time frame that you would recommend someone who's starting new with your strategy? Would it be like the 30-minute, cross-checking that with the 1 hour? What would you recommend?
Right. There's the 1 hour charts, right?
Yep.
This here's just a lot. This here at the moment's just a lot of noise, right? London's opening in half an hour. This here is just a lot of old goof. This, if you're looking back here and here, I know I'm looking in history, but it doesn't really matter. These moves here over there is 1 day's of a move. This here from here to here is 1 day of a move. I would work with the 1 hour as my entry, and that there as my direction and my trend. The first thing I do every single day, I'll show you what I do every day, before I even open a chart, and this is the most important thing of anybody's trading day, is to do this. Let me just find the right one. There it is. There is that. Come up this week. There, Monday. I would set an alarm on my computer at 10 to 3 this afternoon, because the Fed chairman's talking. See all the red alerts on Forex Factory? All of them. That one, this one. I would set alerts for all of them, all throughout the net this week, so that when there's an alert coming out, my phone will jingle. Then I know that there's something to take notice of.
What about the supply and demand indicator? Is that something that...
hang on. I'll pop that on.
Yeah.
I'll pop that on.
Because I feel that that's probably the missing link that so far we haven't touched on, which is very critical.
Hey, let me just get my settings for that one. Right. These here, see these? I have them set as orange. People, if I zoom this out, we maybe see more. There. That's the 3 of them there. There's the supports. This is verified support. It's been retested 3 times. This is called a Shved. I'll show you it. Shved. There it is there. Shved, supply and demand. It's on my template, on my thing anyway. This here has been retested 3 times in history within the last 10,000 bars. So it's quite a good support level. This here, verified resistance, has been retested once. You see where these white dots come within the supply and demand? You see this? There's 1, 2. If I come back here, there's 1, 2, 3, 4, 5 ZZs printed within this area. Those are the ones you want to find. I'll now put on another indicator. Hang on. This will be set now. What am I on now? 4 hour. This super dem is set to 60, which is 1 time frame lower. Okay. What you're looking for are these white dots to be formed. There's one there, a perfect one there. There's the super dem sitting within the 4 hour. This is sitting within this current time frame, and the ZZ printed within the 2 of them.
So you essentially want to cross-check 2 different time frames.
Yeah, 100%. 100%.
And you want the price
100%.
to come into interaction, into contact with the supply and demand in 2 different time frames.
Yes, exactly. It has to do that. There's another one. No, it's not another one. Sorry, that's outside it. There's one there, and there's another one there under that blue triangle. Most of the time, I don't have all these lines and arrows on it. If you want me, I can take them off. Do you want me to take them off? Hang on, I'll just take all these off here. Right, now you can see the dots. Right, there's 1. There's 2. There's 3. That's only in the 1, but even so, you've already got this signal here, so you could have added there.
Yeah.
You could have added on the retest of that level there, and then you've got this one, then you've got this one here, which is in a turncoat, which I'll explain in a minute. They're the most powerful of them all. All right, you've got one there. You've got one here within the supply area. You've got another one here in the demand area. You've got another one here in the supply area. You've got another one here in the soup then, which is in the smaller time frames, supply and demand. These turncoats were once support here and here. They acted as support, and here they acted as support. It went up above, broke above it, came back down below it. Now this turncoat is acting as resistance.
Yep.
That's why they're called turncoats. They turn from one to another.
What is usually referred as an SR flip as well, support and resistance flip.
SR, and exactly, support, yeah, SR flip is another way of putting them. It was resistance, is now support. It was support, is now resistance. They are the most important of all of them, the orange ones that I have.
Yeah. Would you consider longs or shorts outside of these supply and demand areas?
Pardon?
Would you consider to go long or to go short outside of the supply or demand areas being...
Yes, depending on what direction this here has told you me to trade. If that's down below, I only ever trade long. If this is up above, I only ever trade short. Long, short, long, short, long, short, long.
Yeah.
But then if you get a signal like this that's inside of this here, I would advise only to take longs. Right? Don't trade against this, because there's a reason why this is in the double supply and demand area. These aren't. These aren't. But this one here is in a soup them. Within another 2 or 3 4-hour candles, the turncoats could recognize that this here is a better level. There's 1, 2. It could recognize that this is a better level on the 4-hour chart.
Yep.
And this will move to here.
Yep.
Not so much move, it'll widen. The bottom of it will come down to encompass these as well, if you know what I mean. Now, I'll now come down to the 1-hour chart, right? So let's see where we are. Right, at the moment we've got the only thing about this template is the Shrek will automatically drop down to the 30-minute time, to the 1-hour time frame. But you have to change this one now from the 1-hour time frame that it's in down to the 30 minutes, so that it's one time frame lower than the actual time frame you're trading in. So at the moment on the 4-hour, we have a long signal here. Let's see on the 1-hour. I'll change it. Right, now on the 1-hour, you had a, let me turn this round. Hang on, I've got to change this first before I do anything. Change that from that to 30. Right there, that's the 30 there now. This is the one I look at first. This is still a resistance level here on the 30-minute time, on a 1-hour time frame now. So you had the long here, which is a perfect entry because it's inside the supply and demand from the 30-minute, and it's inside the 1-hour. Here, the green one is the 1-hour. The orange one is now a 1-hour turncoat. The red one is a 1-hour with a 30-minute supply and demand inside it. This is a 1-hour, and there is the most important block of them all. It's got a turncoat, which was support, is now resistance, with the supply and demand from the smaller time frame there. So that signal short, this signal long, this signal short were humdingers. If I zoom it out, or zoom it in, I mean, and then pull it up straight, you'll see. This one here, this candle, let me see what happens. Yeah. This Osma is here. This candle here I'm looking at now, the Osma's higher. The price goes higher, the OSMA comes lower. This candle that forms with the ZZ has closed short. So this here was a safe entry, 100% entry.
Now,
Because it's
how long would
closed in
you
the,
hold the trade? If you go short, what's your strategy when it comes to money management, risk
well,
management?
this here, how long would I hold it for, do you
Yeah.
mean?
How long would you hold it for?
Right, well, the first thing I would do, I would put the trade on, my initial stop loss would be there, where my white line is. Just there.
Just
Because
above
a
the
break of
supply,
that,
that supply.
yeah, a break above that, and the trade's wrong. So I'm wrong, and I don't mind being wrong, as long as I've got a safeguard in place that'll only take 50 pips out of me, then I don't mind. But if I didn't have a stop loss on that and it ran up to here or here, then I'm in big diffs. So in my book, the stop loss is absolutely vital. But what I do is when this comes into profit plus 20, say I entered down here, right? My initial stop loss would be up here, which would be what? I know it'd be quite a bit size, but it doesn't matter. It keeps it. It's 200 pips, right? But on a smaller time frame, I would find an entry if I went down to a 5 minute off of that trade. That there would be my stop there. 25 pips. Because if it went against you, the trade's wrong. So you're finding stop losses on smaller time frames, thanks to these babies, these supply and demand double areas, that will keep you in a trade. In actual fact, I've done the wrong one, haven't I? I've looked at the wrong one. What date's that? The 16th. I need to go back to the 16th.
Yeah, and if you can elaborate as well in the take profit target, are you actually looking for a
I will.
specific target, or just let the market determine when are you going to be out?
16th. Yeah, okay. 16th is there. That's that one there. So on this time frame, on the 5 minute time frame, my stop loss, 25 pips. Right. So I'll go back to the 1 hour chart now. Sorry about the dinging. That signal's coming through there. Right. So on this, where was I? I was on this trade here. Right here. On this, I would have entered here because the candle's in the same direction as the ZZ's telling you. It's printed. It's closed there. Entry there on the open of that one there. I would have, by this point, my stop loss would already be break even plus 21. So on the entry of the turncoat, what was then support, my stop loss would be break even plus 21, 20 pips behind the price. So that's 41 pips. My stop loss would my take profit is already at break even plus 21. So to be perfectly honest, I don't care where it goes from there. All I ever worry about is not taking my capital. When I saw this form, when I see this ZZ form, which would have probably formed somewhere on this candle here, and then move down to this one, and then down to this one, and wait for the divergence, which is there. No, there's no divergence on that one. Sorry,
No.
That one there would have got you in. This one here definitely gets you in. My take profits, I always have my stop loss on the NASDAQ running about 20, 25 pips behind, say 50 pips behind sometimes, depending on that, what sort of move I think it's going to be. But the major thing I do is I always bring my stop loss into a break even, and then it's trailed. I don't know if you use trailing stops, Ivan.
No, I don't. I just essentially make sure that the position is protected, but I then let the trade breathe to a default area of 3 to 1.
That's you took the words out of my mouth. If my trade is protected, I go and find another bus. I call them buses.
Yeah.
Because there's that many trades in a day that they are like buses.
And talking about Yeah, go ahead.
I never
Sorry.
run for a bus. I never ever run for a bus either. I never chase a bus because I never chase a trade. If I miss that bus, I'll go and find another bus.
Yeah. So talking about the multitude of buses that you're going to be able to catch in a day, I believe that this is going to be a tall order if you like to actually be able to catch all the buses. And I know that on the sidelines you've been working with a few traders to provide. I'm not sure if you want to call it a trading signal service, or at least having automatism, having actually the signals being generated automatically from the 1 minute. Is it from the 1 minute all the way to the monthly? Can you just walk us through it?
Hang on one sec. I've just got to remove something. Hang on.
Yeah.
Right. Can you see those?
Yep.
Can you see those?
Yes, I can.
Right. That is signals that's sent to my email. That started there this morning there's midnight. Right, that's midnight. These are all M30, H1, H4 signals, right?
Mm-hmm.
All of them. There's no signals in here below this, right? Mm-hmm. This is the amount of M30, H1 and H4 signals that I've had just since midnight. Yeah,
they appear to be fired very consistently.
Yeah. If you go, when I tried the coder I had, he said to me, what time frame signals would you like? I said, well, I'll try the 1 minute just to see how it goes. On one pair, I had 631 minute signals.
In one day?
12 hours.
Well, that would be hard to handle.
Ivan, it was ridiculous. It was ridiculous. And when a friend of mine that's also in Global Prime back tested them, 96.4% of them won.
Impressive, to say the least. So what are your plans with these trading signals? Are you actually looking to market them? Are you looking to provide this service to room members?
You know something? I haven't got a clue where it's going, Ivan.
Okay.
It's sort of. I had no intention of releasing this to anybody.
Mm-hmm. The moment you release this to the well, you're not going to encourage education. You're going to provide the fish instead of teaching how to fish.
Yeah, if you're fishing from a boat where there's no fish and there's about 1 million bubbles coming up 100 yards away, go and put your boat over the top of them bubbles, because that's where the fish are. You're fishing where there's no bloody fish. All I've got to do to learn this is for somebody to look to see where the bubbles are, which in actual fact, the bubbles translate into charts. I use analogies all over the place because it's far easier to learn. If you can ride a bike, you instinctively can ride a bike. I see these trades because I can ride a bike. Until you can ride a bike, stay on a demo. Once you can ride a bike, by all means, go live and beat the hell out of the market makers. I love it. I want as many people as possible to follow this really, really simple 1 bar at a time system. You don't have to worry about what's happening to the left of the chart at all. All I'm worried about, if I zoom my chart right in, all I'm worried about is that there. 18th and the 21st of September. And where the supply and demands are, where the ZZ are in relationship to those, and where my demarc lines are.
You mentioned that the price is always wrong.
Pardon?
You mentioned that the price is always wrong.
Price is always wrong.
Can you elaborate on that?
See that there? Can you see where my crosshair is?
Yep.
Right? Price has gone up, although the indicator comes down, and then what happens right at the bottom of the chart? There's a huge volume candle, and it's red.
Yeah.
So that high in price there is 100% wrong. That candle there tells me that. So the price goes up, the OSMA comes down, a volume candle prints, the entry of that candle, the entry open of this one, which is the close of this one, obviously, is a perfect 100% entry. ZZ's printed within the double supply and demand, close in the right direction, boom, 300 pips. Thanks very much.
Yep.
And with my 25 pip trailing stop, let's see. It wouldn't have been took out there. 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 So from a 25 pip stop on a 1 hour chart, that gives me 300. 25 to 300 is what? 12 to 1, R to R.
Is there any market or any set of markets that you don't like to trade? I believe you mentioned in the room that better stay away from the Canadian dollar because of the intertwinedness with the oil prices. Can you talk about it?
Yes, 100%. That shows me that people that have got influence are actually reading my stuff, because I'll just pull up a chart of CAD yen. Right. Let me just get this in order. I don't even need any zigzags or anything. Let me just see. Let me zoom this in a bit. Right, now on the CAD yen, if you can't tell that there is some sort of bottom, you shouldn't really be trading it. The CAD yen, all of the yen pairs, it doesn't work. It does work, but it doesn't work so well. Because
do you mean yen pairs or Canadian dollar pairs? Sorry.
Sorry. Did I say yen? Oh, sorry, I meant Canadian
you said yen.
dollar. Sorry.
Canadian.
Sorry. I meant Canadian. Sorry, not the yen.
Okay.
But it doesn't work so well with the CAD pairs because the CAD is so influenced by oil, which in hindsight then is influenced by the dollar, which is then influenced by other outside interests. I just leave the CAD pairs alone because of 96.4, the 3.6% that don't close, that go into loss and close at a loss. That means that my capital goes down. That 3.6, and I have it documented as well, are CAD trades.
Yeah, so proof is in the pudding.
Yeah. So over the next 6 months, which Jem has asked me to do, I'm going to have all the trades catalogued as live trades, but from within a demo account, excluding the CAD. So it just the only thing excluding the CAD is it takes me out of 7 pairs. That's 7 crosses. That's all.
Yeah.
So out of 28 pairs, 28 charts, I lose 7, which leaves me 21, plus the other 12 I follow, the indices and the commodities. That still leaves me, what, 33? If you can make 10 pips a day on 33 charts, that's 330 pips. If you have a tenner a pip, that's £3,300 a day. How much money do you need?
So talking about how much money do you need and how many pips are you interested to make per day, I think that also has to be connected or linked to the question, what is your daily routine? How many hours per day do you want to dedicate to the markets? So how would you answer these questions? What's your routine? At what time do you sit to your office? How many hours per day do you like to be monitoring the markets? Is that something that is replicable every single day or becomes fairly random? At times you feel like walking the dogs and then coming to trading, or do you follow a very repetitive behavior in terms of when is it that you're going to be trading the markets?
I think me and you are the same person in that respect, Ivan. I would usually be at my desk in my office. I'm not in my office today because I'm feeling really, really ill, but that's beside the point. I'm doing my best at the moment. I would be in my office an hour before Frankfurt open, which means I have to be in my office for 6 o'clock London time. Frankfurt opens at 7. London opens at 8. I go through, as I showed you, I go through my news, and then I do this here. I got this from you. I've only just recently started doing this. Here. Go to that. See this?
Yep.
I set this here to a day, refresh it, and I see what are the most volatile pairs. Right. Aussie yen, beauty, 0.84%. Right, that's how volatile it is today. That's the most volatile pair there is. 0.84%, I would be straight looking at this here then. Aussie yen, right? I would have a look at the Aussie yen to see, where is the Aussie yen? There it is there.
Yeah.
To see what was the opposite to the Aussie yen. You've got the dollar Swiss, dollar CAD, you have the Aussie CAD. So I'll be looking at all of these that are the non-correlations, the opposite correlations to the Aussie yen. Before I even look at a chart. And my pen and paper, my notepad is already filling up. In pen and paper, not writing it, not on a computer, writing it down, pen and paper, it's already starting to fill up my notepad. Because I've got this, I take a note of this, I take a note of this, this, blah, blah, blah. And then I come on to this one that you showed the other day. This here is a minter of a bit of kit. Absolute bloody minter.
Very handy.
That there. You showed this the other day. I don't know where I read it, but I saw it.
Yep.
It is fantastic. That just tells you on a daily chart what every single pair, what every single currency index is doing. All you have to do is to find the ones that's going up. I would say today, on a daily chart, although I'm going against my own advice, the CAD yen would be a fantastic sell.
Yeah, it looks like Canadian yen, Canadian index is breaking away from that bottom of the range, and the yen looks like it's got a lot of momentum behind.
Yes, exactly. But because it's the CAD, it's only one cross. I would leave it alone. But my day starts at about 4:30. First job, take the dogs out. They're the priority because they need out. I have to look after them. I love them. So half an hour walking my dogs. I'm back. I'm in the shower. I boil a kettle. This is exactly, I'll tell you my routine. I walk the dogs, then I'll put the kettle on. Then I'll go in the shower. I wash myself and then I'll put it on freezing cold for about 10 minutes. And here in Scotland, it's not all that warm, as you probably know. But by the time I come out of the shower, the freezing cold water is actually warm. And it does something to you. So I then take my cup of tea, I'll put on Bloomberg, and I'll go and I'll shut my eyes and I'll go and lie on the beach in the Bahamas. Then I'll jump in the car, I'll go round to the office. By 6 o'clock, I'm in the office. Then I put on what I call chill music on my YouTube or my Amazon thing, Alexa. And I just put that on really low, nice and quiet. Or I listen to a really nice book about mental development or something like that, just while I'm looking through the charts. 7 o'clock, I turn it off. And then, depending on how, I'm quite an excitable fellow, as you probably know, over the 8 months or 10 months I've known you. Depending on how interested I am in the charts, depends on the time frames I'll pick.
Yep.
If I want to be more busy, I'll go shorter. If I want to be a bit more relaxed in the trading, which I always am, I'll go longer time frames. But if I have things to do, then I'll maybe not even trade at all. I'll just take a note of what is there on my screen for the daily and the weekly, and I'll maybe come back tomorrow again. But I always have that same routine before I start. And I try to make a point for my family, for Carol and my dogs and family life, to try and finish at 4:30. It's not worked out very well now recently, but that's not to say I haven't been trying. And in my book, as long as you're trying, you're winning. As you said at the beginning of the interview, Ivan, if you're doing this 50% of the time, you might as well go and dig holes for a living.
Well, there's going to be an awful lot of players that are going to be putting all their effort in, and if you're just going to be half-hearted and not doing all the effort, you probably are going to be at a major disadvantage.
Do you know something, Ivan? If you were to be working for an employer as such, and you put in 50% effort, do you know what happens 100% of the time? You get sacked.
Yep. Next.
100%. If you go to your work expecting a week's wages and you put in 50% of your effort and your employer gives you 50% of the money at the end of the week, you're going to be pissed off.
Yeah.
But the other thing about it is if you put in 50% of the work and to get 100% of the wages, you'll maybe last for 2 weeks, but you'll be sacked. So doing this here at 50% only means one thing. You're going to lose. And the market will take every single penny that you've got. And I mean that. Every single penny that you've got, if you're only willing to put in 50%. If you put in 90%, you'll maybe make a living at it. If you put in 100% to learn just one instrument, like I did when I really got grips with this, I traded nothing but the DAX. With the ZZs, with the supply and demands, and with the OSMA. One bar at a time. In a 30-minute time frame with a 15-minute underlaid on it. And I could almost tell without even having any indicators on where the DAX was going because I was so used to it. I put 100% effort into learning it and it paid me back.
Yep. Now, two of the Atmos authorities when it comes to becoming influencers in the way that you are trading, arguably would be Bill Williams and DeMark. Is there anyone else, or would you just give credit to these two great masters of trading as your number one and number two, or both at the very top, at the helm of who they've been as influencers to you?
Right. I said to myself, I was going to stay away from this subject, but I'll go with it and see where it goes.
Okay.
Bill Williams, obviously, is the biggest. Tom DeMark has other methods apart from these trend lines. He has what's called sequentials, which I will use sometimes on weekly charts because Tom DeMark's method on weekly charts is unbeatable. It's called sequential. It's counting. Flipped when it flips short to long and long to short. There's six bars in the setup. The first bar flips to the fifth, the second bar flips to the sixth, and that's a flip. It's what Elijah trades so brilliantly all the time. He looks for the intersections, which I call flips, and he trades them, brilliantly. He's maybe the man to have an interview with about that, but not me. Tom DeMark, he was a pen and paper man. Bill Williams, a pen and paper man. And that's why I'm a pen and paper man. Because when you actually write something down with your own hands, for some reason, the brain keeps it. Whereas if you just type it out into a notepad on the computer, it doesn't work the same. But there is another gentleman. I'm not going to say his name.
Okay.
It was a long, long time ago. And it was his influence on me that made me see that markets are nothing but a triangle. Whether you're working with a tiny triangle in a 5-minute chart or a massive triangle in a monthly chart. If you look at my chart on the screen here now, what is this here? That green line, this red line, and up to the green line again. Mm-hmm. And then you go down to here. What's that there? Down to here, down to there, and up there again. And up to here, there, there. It's either upside down candles, back to front candles, inside out candles. It's nothing but candles. But it's nothing but triangles, sorry, triangles. Mm-hmm. The whole market is a triangle. And that gentleman, without him maybe knowing it, made me see that. And when you see the market as triangles instead of bars, and breaks of the levels of the triangles, of the lines, I mean, like this is breaking out here above this level here on a 4-hour NASDAQ. If you go to the daily, like I had, there's the ZZ printed on the daily. Look where the close is now. If this closes long, it was down here when I started the interview. It's now up here. It's about it's maybe 10, 15 pips away from reversing this and going long. If it does go long and closes long today, that is a fantastic trade on a daily chart.
Mm-hmm. Are there any other markets that you're looking or you are stalking today or in the next 24 hours that you may see an attractive opportunity into the higher time frames, 4-hour or daily?
Let me see if I can get this one up here. I'll just take this to the daily. I'm not 100% sure if this is the right one. There it is there. Right, see this? See this level here?
Yep.
Right, you got one, high, lower, right? I know for a fact, without even looking, there'll be a fractal there. Mm-hmm. Red or blue, well, it'll be a red fractal. It'll be at that level there, right? Support, resistance here turns to be support here, and the resistance there again. This here will now be let me put it on. There it is. It's a turncoat support now, right? It was a turncoat resistance here and a resistance here. Now it's a turncoat support. That there, the yen pairs, if you go to near enough all of the yen charts, I guarantee they're all in the turncoat. Because the yen, there'll be a ZZ here somewhere. I haven't even got any of the stuff on to see, but there'll be a ZZ on one of these two candles, this one or that one. This one hasn't closed the right direction yet. This next one maybe will. But the yen, I find the yen when we went to this chart here, there's the yen. If I go to a weekly, look at this. See that? Mm-hmm. That there is a support massive on the weekly yen.
Yep.
Stop it coming short. There's so much goodness in this here. Unbelievable. All the way back up to this high again.
So looking for shorts Euro JPY?
Yeah, no, looking for no, looking for what was my chart there?
Euro JPY, you were looking.
Yeah, it would be. I would be waiting for this to come up here
Okay.
and see. Let's see if it carries on this trend. You see this? I wouldn't be entering short here, but you see this when it comes up to the next resistance, which has been tested 8 times in the previous. Does that say 8? Oh, no, 6. It's been tested 6 times in the last 10,000 bars.
Yep.
When it comes up to this resistance level, I would be looking to short this all the way back down to here, because this here is my first point of reference. If I do this here, Ivan, now let's see. Let's just see. From this high to there, that's the first reference point, is this low there. See it? You're 100% tall. That's your 100% tall, right down to this level here.
Yep.
Then we come down to the next one, which will be the high of that there. Let's see. The high of that there. That low there. The high of that is there. See this high here? There. That's your 100% tall.
Correct.
It's so powerful. But you use it on the way you use it is this way. You use it on this stuff. I use it on this stuff.
Many ways to skin a cat.
Many ways to skin a cat. I looked on already. It's a way of telling the future from the past.
Yeah, and there's a
Bar to
component
bar
of symmetries.
divergences.
Yeah.
Sorry, Ivan. Sorry.
I was just saying that there's a component of symmetries in any market. Markets at the end of the day are dynamic price movements that are also going to be orchestrating, more often than not, symmetrical harmonic patterns. And whenever we can actually align symmetrical measures, then that's going to be a very powerful location in the chart to expect market makers to come and step in. We're going to be expecting profit takers. We are going to be expecting contrarian traders. And there's going to be at certain points in these symmetrical targets, points of confluence. And these confluences are going to be leading to some sort of reversal.
Yes, of course. And the bigger the time frame, let's have a look on the weekly chart. Right? Now, somebody asked me once, how do you tell what a trend is? Right? I said, this is my exact reply to him. Go from top left to bottom right. If it's going down that way, then it's a downtrend. Bottom left to top right, then it's an uptrend. I know people follow Elliott waves and all of these things, but all you need to know is what the trend's doing. This here, oh, hang on, sorry. This here is doing that.
Yep.
But then again, it is also doing that. So, in actual fact, I'll move that one up from there to there. It is also doing that. Right?
Yes.
So, you see, if I was to draw these precisely, which I should do really for the sake of this interview, but still, a break of that level there, here, you see that level there on that triangle?
Yep.
Just the level we talked about, that low. A break of that level there leads to there.
Yeah.
I do a monthly chart. Shows it even clearer. This line here, I'll draw it precisely, hang on. I know it's a bit thick, the line, but I'll just draw it precisely. It's a perfect. It touches 3 points. It has to come up. It has to come up a wee touch to actually hit that line. And that is probably going to be taken up by the 4 hour, the 1 hour, the 30-minute time frames, all pushing that long over the space of maybe a next week or so, back up into that resistance level on the daily. And then what's it going to do? Whoosh.
Euro JPY.
Right. To all the traders that's watching this, all your analysis on the weekend doesn't take very long. Do that. Put those lines on. You don't have to worry about anything else. Just put those lines on. Go down to your weekly. See where they come on the weekly. Are they still intact? Are they still looking right? On the daily, leave those lines on. On a piece of paper, take a note of where all these particular, like I have to adjust that line, I'd have to adjust this line, blah, blah, blah. Take a note of this level, take a note of this level, take a note of this level that was acting as resistance is now acting as support. Take a note of that level and take a note of that level, the ones that I did with Ivan's 100% tool. And when you get anything near this level or that it passes this level, you know where the next move is. You already know it. If you want to trade from the 4 hour charts, do that on the daily chart. Take a note of where the levels are and then drop down to the 4 hour chart. And then it looks completely bloody different. But if you already know from the monthly, the weekly and the daily what that is meant to be doing, if you're patient enough, you will get that. If you're not patient, you'll get stopped out and you'll lose that.
Correct. Now, do you have any final words before we wrap up the interview? We've gone for more than 1 hour, 1 hour and 10 minutes to be precise.
Do you know how long I thought? I was going to do, Ivan?
How long?
I thought I was going to do about 5 minutes.
Time flies when you enjoy what you're doing. Time flies.
I'll tell you something. You see, when I start talking about charts and trading and trying to help people, oh God Almighty! If we were still here at 4 o'clock, I'd still think it was about 20 minutes.
Absolutely. So, Mark, where do you see yourself? Allow me to ask you before we conclude the interview. Where do you see yourself in the next year, 2 years? Do you want to put left and center and one of the priorities for you to keep educating traders now that you've let it all out and this system is something in the open domain and people are learning it? Is that where you see yourself, educating global prime traders and trying to become a reference and an example for others, mastering the markets?
I had no intention of sharing all of this, Ivan. Do you know that? But then my mind said to me, do what's right, right? Mm-hmm. I always try to do what's right. Yesterday, I came unstuck by doing it really badly, and I sort of paid a price for it, but still, it doesn't matter. But if you have the right intentions, is the word. If you always have the right intentions, God will always find a way. Well, my God, anyway, always finds a way of paying me back 1,000 times over. I don't mind if every single person that trades starts to use this free of charge. I don't care monkeys, because I want everyone to be a success at this, because it's not rocket science. It honestly isn't rocket science. If you want to be one of these technical analysts, no disrespect to yourself, Ivan, you're fantastic at it. That wants to learn every single in and out of every single Fibonacci and bloody blah all the other bits and pieces you have to learn. That's fine. You can do it that way. But I find it hard work. If you go along one bar at a time, looking for highs and lows and breakouts and disparities, that's all they are, is disparities. Mm-hmm. the Osma against the price is not a signal to trade. It's a disparity. And when you put the Chaikin money flow on as well, it picks up every single disparity that there is in the market. When the Osma and the Chaikin and the price divergence all line up on the same bar in exactly the right place, there's maybe 5 or 10 of them a week. They are the ones you want to put your house on. Those are the capital builders of the markets. The rest are like your lunch money and pays the bills. The ones where everything lines up, and there are about 5 or 10 of them a week, they are the capital builders, where you can add every single fractal break. I haven't even put on the fractals. I'm going to put the fractals on for 2 minutes, Ivan. Let me see, where's fractals? There they are, Barry's support. Right. Euro yen weekly. Euro yen monthly.
Yep.
Right. A break of that fractal there on the downside will take it where? It'll take it to there first, take profit 1. Then it will take it to there, take profit 2. Then it will take it back exactly where we had your 100% tool, take profit 3. Then if it carries on past that and breaks that fractal, take profit 4, take profit 5, take profit 6, take profit 7, and last of all, take profit 8. 2,500 pips. On a monthly chart. Then you go to the weekly chart, then you come back down to the daily chart, and here's where we're at now. If that breaks that, take profit 1, there, take profit 2, there, take profit 3, there. And you just let that go. I don't know how many pips that is. That's what, 184, 185 pips. If it does that in a week, 185 pips times by 10, 1,850 quid. Thank you very much. Turn it off. Go and walk the dog.
Phenomenal,
How much money does anyone need, Ivan? I'll tell you, this is the last thing I'm going to say, and I'm going because I'm gasping for a cup of tea now. The market is the stock market, and the trading market is the only market in the world that will take money from the impatient and give it to the patient.
That is correct. And there seems to be this tendency that the more you learn about the markets, it's not all about getting into all the 1 minute time frames, 5 minute time frames, but rather exercising this quality, this attribute of patience, letting the market always come to you instead of you chasing the market, instead of you, as you pointed out yesterday, chasing the buses. You will never chase a bus because you know that around the corner, there's always going to be one more coming.
100%, Ivan.
And I think
and
with that
by me doing this video now,
yeah,
if I was to die in an hour's time, I know I've done my bit for the trading world, and that is no me being big-headed. I've always wanted to do this. As soon as I found this out, I've always wanted to release this. And as I said to Jem in a phone call there the other week, it has taken a massive burden off my shoulders by releasing this.
Well, I'll tell you what. Now you've got a legion of soldiers, if you will, that are following your tutorials, are following your educational material, and before you know it, hopefully there's going to be dozens and dozens, hundreds and hundreds that are going to be successfully trading this strategy, which is something that you could only dream of, especially the day that you let it all out and decided that it was all about being paid off 1,000 times greater rewards by you first doing good deeds and letting others learn what you've built over many years.
Yeah, thanks, Ivan. I appreciate that now. I do, because that means a lot. Uh, if you just take one look at that chart of mine there now, just solely with the fractals on it, right?
Mm-hmm.
It breaks the market down into sections. I'll show you what I mean just quickly. I wasn't going to say any more, but I'll just show you quickly.
Yeah.
What we're worried about, we're not worried about none of this stuff down here, right? See all this stuff here? Don't worry about that.
Mm-hmm.
That's on that fractal there.
Yep.
That's on that fractal there. From here to here is our field of play at the moment, right?
Yeah.
A break of this blue fractal takes us down to there. That's our field of play then.
Mm-hmm.
Then we come down to this one. 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 And you see where you get big clusters of fractals like this here? See all these blue ones here?
Yep.
This is a daily chart. And these, look, there's one there. There's two fractals there within 10 pips of each other.
Mm-hmm.
Let's see. There's two there, identical level. Where you see fractals like these two here at this bottom yellow line, where they all line up within a few pips, that means that something's happening. Fractals, what Bill Williams discovered, I've watched every one of his videos a million times over.
Yep.
What he discovered is nothing short of a miracle. And what Tom DeMark discovered by sequential counting and his trade lines, I haven't got time to explain to you how he works out those lines, but there is a method. You probably know it yourself, Ivan, anyway. You can explain it on afterwards. But there is a way, there's 100% way that he always uses to find those diagonals. And on a break of those diagonals, it's a very, very strong indicator that it's going to go to the horizontal lines that those diagonals correspond to.
Mm-hmm. And probably we can go through another, chat at a later stage and touching perhaps just in Tom DeMark diagonals and other, concepts. But
yeah, the sequentials. I'll do another. I'll do another one of these.
Yeah.
Going through the intersection and the flips and the sequential counting to show when trends are dissipating and it's going to flip and go the opposite direction, because nigh on to the candle, when you've done the counts, it does flip and it does reverse, and then you do the count the other direction and then it does flip and it does reverse.
All right. So, Mark, it's been an absolute honor to have you today for this interview. I really trust that your health is going to get better from here on out. Please make sure that you have a fair share of hours of sleep every single time, that you have enough making pips per day. And yeah, I think that it's been a lot that you've shared today. People are definitely going to have a great time going through this material, and hopefully it's going to reinforce certain concept that you've already taught and shared in the Discord room. Thank you so much for taking the time, buddy. And
right.
with
Tom,
that,
patience,
yeah,
patience, confidence, and faith.
correct.
The 3 words that you
and
need
the way you
to get
sound
in
when
this.
you are communicating all these concepts is definitely from a stance of self-belief, of conviction, of knowing that you've discovered something that is so powerful that even through your own voice you can really tell that you have a very, very firm confidence and belief and conviction about this type of methodology that allows you to read the markets one bar at a time.
And if I'm wrong, if my trade's wrong,
Yeah.
this is a vital point of the trading. If I get the trade wrong, and I have done a few times recently,
Yep.
I don't take that trade to heart, because all it is the market has had a different idea to myself. I don't take it personally, because there's another bus coming about 20 yards behind the one that I'm on.
Yeah, the moment that you see your losses as just purely the cost of running a business and a transaction cost.
Every business has a price.
Exactly.
If you're on a call center, your rates and rents and everything else, your heating bill and everything else, you have to factor all of that in. If I lose 5 trades and win 140, those 5 trades are only my costs of having the
Operations running.
the operation running and the price of having freedom to live my life exactly as I want to live it.
Yes.
Which is not the same as getting out of bed at 6 o'clock every day, getting in your car, going to an office and finishing at 5 for £1,000 a week.
Correct.
And doing what someone else wants you to do.
Yeah.
And having 4 weeks holiday a year. Because this here method, you can do lying on a sunbed in the Bahamas with a laptop on your lap.
All right, Mark, thank you so much for your time. We about to hit 1 hour and a half, so I think that's enough for today. I'm about to head out to do some CrossFit and have a bit of a cognitive break myself. We will conclude today's meeting. It's been a pleasure.
And I'm practicing my card tricks too.
He cannot wait. Let's just hopefully get over with this year, with this shit show of COVID-19.
Right. Oh, shit show, you're right there. We're locking down again here, the UK.
I know.
Goodness me, I don't know what they're doing. They thought it was a great idea to open the schools to teach all the children. Mm-hmm. And now we're all locking down again. Well, oh my God, what do they expect to happen?
Yeah.
Thousands of school children all mixing together, thousands of university graduates all mixing together. What do they expect?
Correct.
Not rocket science. Honest to goodness.
All right, we could go on forever. Let me just pause the interview for now. Wait a second.
Okay, mate.
Wait.
Yep.